But let's ask Sridhar Sivaram, what is he liking, what is he not liking in this market? Sridhar, hi, good morning. Welcome to ET Now once again.
Thanks for
While the
inviting me.
index level continues to test your patience, it's really not bad. If you look at the macro parameters, the high frequency data, we're in a good stead.
Yeah, so actually, there are times when, so the patience level of people have become very less. So I always give this data that we've had 10 straight years of positive returns for the Nifty, which on a calendar year basis, which itself is a record. It has, at least from 92 that I have tracked this market, I haven't seen this happen. And this possibly may be the first negative year. So not so bad. I mean, after 11 years, you get one negative year, and we're all over the place. The mid-cap index is at all-time high. Small-cap index is almost there. So it's okay. I mean, I remember my first 10 years, I think 5 years were negative years. And out of that, I mean, I'm talking between, say, 94 and 2003, you just go and see the market did nothing. And yet, the index over 25 years has given you, fairly reasonable returns. So I guess, as I say, the patience level, because we've seen such good returns post-21.
I think we've erased our memory pre-COVID,
Exactly.
right? You only take the COVID year as the benchmark and what has happened
I guess
after.
it's a question that there isn't, this is not a guarantee that you get returns every year. So you be patient, you be invested, and you will get returns.
Okay, so be patient, be invested. Where, Sridhar? Because you've got the knack of getting calls right. Give us a sense. Any fresh money you're deploying, and if so, in what areas?
So I think the large caps are struggling, and I think it shows up in the results also. So unfortunately, there's a cycle. So this is the cyclical issues that we are seeing, especially say in the financials, the IT sector. You can add a few more staples where growth is very I would say tepid. But as soon as you come to stocks which are below the top 100, you see the activity levels are significantly higher. So we are very bullish on the entire manufacturing space. I have to caveat that a lot of the stocks have run up. If you look at near-term valuations, they look very stretched. But the entire manufacturing space, be it power equipment, chemicals, CDMO, then defense. I mean, there's so much of activity happening there. I mean, I was at a conference yesterday, and the projections that the companies are giving, they're like, I mean, I'm seriously redoing numbers because this is the number they're giving on a conference. So obviously the confidence level is very high at this stage. So I think that's the challenge, that if I'm an FII, if I'm a large cap investor, I'm struggling. If I have a smaller set pool of money and there's mid caps is investable, then there's enough and more. So I think that's the challenge that the Indian market is facing, where the Nifty hasn't moved for almost 2 years, but there's a lot of activity in the mid cap space.
And is that all earnings driven? Is that largely the function that earnings within the broader markets have been far more stronger than the Nifty, and at some point you expect a pickup within the top 50 as well in terms of earnings growth?
Yeah, it will pick up, but the question is, can this test our patience for much longer? I think some of the larger segments may test our patience for, I think, maybe another year. So that's the challenge, that we could continue seeing the index struggle for a while, but the activity level in the broader market may continue very strongly, because the earnings growth is also strong. So even if you look at the earnings growth for the current quarter and you look at the mid-cap earnings number, they're north of 25%.
That's correct.
And whereas at the Nifty level, even though the headline is closer to 15, if you strip out the commodities, then it is nothing much to write home about.
Well, Sridhar, we don't have those FPI compulsions, and the retail participant is very, very happy with the mid and small caps. But the thing is that it's the valuation sometimes where you feel that, can you really add money at these levels and these prices? Where is it that you have conviction to even add positions in the mid and small caps now?
So I think there are pockets, so it's become a very bottom-up market. So even as I mentioned, financials may struggle, but you can still find reasonable value in, say, some of the NBFCs, housing finance companies. I was recently looking at ratings companies, and they look very interesting. I mean, they've gone off favor, and valuations have significantly come off. And same is the case with, say, even manufacturing. You do find pockets where manufacturing isn't linear. That is, which means that you don't get every quarter. It's not like every quarter you get 20%. There are challenges. You could get commodity prices, which go up, and the margins come down. So you do get opportunities to get in. Textile is another space we forgot to speak. I mean, that's another emerging theme which is coming up thanks to the EU trade deal. So I think there are enough and more pockets where valuations are still reasonable, given the earnings growth potential. So I don't think the challenge in India is identifying stocks. The challenge is identifying growth stocks in the large cap space. Let me put it that way.
Yeah. But talking about manufacturing, since it's such a large umbrella right now and many of those spaces are well discovered, again, narrowing down to a few.
No, so see, if this is a structural theme, like say power equipment, if our power demand is going to continue, and actually this is a global theme. Globally also, the fact that US itself hasn't upgraded their, the grids and the power systems, and with the demand for AI and data center, and India is going to play a large part in that. Plus what happens if the electric vehicles demand comes, plus our own demand because of a 6-7% GDP growth. So I think this is a structural story. You have to pick and choose stocks from there. They will have earnings growth of north of 30%, especially the equipment companies. So obviously you're not going to get them very cheap. So that is the challenge. So I think that's how I'll put it, that if you assume that there's no re-rating from here, even if you get earnings growth returns, that itself is fairly significant. I'm saying even if there is a de-rating, you don't get the full 30% earnings growth, even a 20-25% return. Even that is significant. Stocks can double in 3 years if you get a 25% return from a stock. So I think there is opportunity. As I said, I'm repeating again, it's become a bottom-up stock pickers market. Top-down themes are just not working. It isn't like what we was earlier, just buy financials, just buy the top 3 banks, just buy some IT companies, just buy some consumption name, and you just sit and relax and go for a holiday. It's not like that. You have to work hard. These old methods are not working. I doubt it will work. I was recently having a conversation with my ex-colleague in New York, and she asked me, give me a large cap idea which I can buy, and I really struggled.
You were struggling.
I really struggled, and I was thinking, when was it last that I couldn't give a large cap name? So I'm just saying that that's the state we are in. This will change. So I've seen enough markets. I'm not seeing excitement right now. Maybe in 6 months things will change, and next time I'm here, I will have lot of large cap ideas.
What will that trigger be, Sridhar? So curious to know, right? What will that trigger be? Will it be earnings? Will it be a larger consolidation? Will it be a sort of de-rating in certain spaces, pockets? Is valuation looking stretched versus growth?
No, so everything is earnings, right?
Yes.
So there's nothing else. So
yes.
What matters is earnings. The large caps are struggling. So let's take an example of financials. Why is it that large cap banks are struggling? In my view, they are struggling, and we discussed this last time, 4 months back when we came here. This is exactly what I was saying, that the large cap private banks will struggle because the PSUs are lending very aggressively. Look at the rates. When have you last seen a 7% for mortgage? Lower than 7.5% for autos. And it is not just a namesake loan. Now you just go back and see how did they grow in the last quarter or in the last 4 quarters. They are growing at almost, in autos, the top 6 bank, excluding SBI, they grew at almost 30% last quarter. The entire 6 PSUs, their total loan book is 60 lakh crores, total loan book. Out of that, autos obviously much smaller. Mortgage, again, they grew at say 17-18%. So it is not just a namesake, they're actually growing, taking market share from the private sector. So private sector in the last 4 years have lost 15% market share in mortgage and about 11% in auto. Predominantly has gone to PSUs. So your profit pool has come down. You were lending at 8, 8.5. Now a competitor is lending at 7 because he thinks I'm happy with a 1% ROA and a 2.5% NIM.
Correct.
Will we be happy with a large private bank giving a 1% ROA? No, we will not be. So that's the challenge. So if they can't find enough growth opportunities, they slow down their loan growth, trying to protect the NIMs. But this is an old mantra that I've had, that if there is excessive competition, you're better off being a consumer than a shareholder.
Absolutely.
That's exactly what is playing out. That, this is excessive competition. I rather borrow right now than be a shareholder of a large bank. Unfortunately, I don't need to borrow, but whoever is borrowing today, they're very happy. I think the happiest person will be Raghuram Rajan, because he struggled to get transmission.
Correct.
And he tried all parameters by which there could be transmission. Because of competition today, we're actually seeing transmission. We can't, and RBI is not complaining. So we're not seeing anything from Reserve Bank on this. So that's the point I'm making. But this will change. Maybe rates go up, the intensity of competition goes on. I don't know what happens. But at this stage, I'm not seeing excitement there.
Right. But you're suggesting something very, very interesting. You're saying that maybe 6 months from now, this changes, right?
Yeah, if the competitive intensity from the PSUs change.
Correct. And what will lead to that? Do you think that asset quality cycle? Do you think liquidity?
It can be a combination of all of those.
Okay.
But we don't know today. But as we speak, there is no asset. So this is not banks underperforming because of asset quality.
Correct.
Asset quality is pristine. So there is no issue.
Correct.
So this is more a profitability issue. That's how I'm seeing.
So this is more structural.
That's the problem.
Yes.
Exactly. So that is the problem. So
Yes.
if this is structural, then to say that, hey, these banks used to trade at X price to book, there will be reversion to mean. My view is there is no reversion to mean, because this is the new norm.
Fair point.
So you have to figure out whether, can it rally 20% from here? It's possible. They've come off so much. I'm not in the position to, predict small rallies here and there. I really don't have the expertise. Structurally, can I see them double in 3 years or 4 years? I'm not able to see. I can't see a 20% earnings growth or even an 18% earnings growth for any of the large banks, including the PSUs. So I'm better off staying on the sidelines.
You're staying on the sidelines for PSUs as well now?
Yes, because they are the cause.
Got it.
Where is the profit growth for them? See, we were the big PSU bulls, back in 21. We played that very well because the earnings growth was, substantially higher, and thanks to lower provisioning that they had to do. All the juice is taken out, so it's no longer there. It's not. Okay, there is a difference of opinion from my view to what our house view is, because some of my colleagues believe that valuations are very low, and I agree with that. So that's the challenge.
Sridhar, there is what's happening here in India at one end and what's happening globally as well, and you track that very closely. I mean, look what's happening on the US long yields and what's happening in Japan. I mean, each of the yields are sucking away money from each other. What happens should this yen carry trade unwind blow up? And as an Indian investor, how is it that you function right now? Do you buy protection, sit on cash, up your gold investments? What do you do?
So I think this is a story which nobody has a clear answer. US has a challenge. Their borrowings are too high. They need to bring down their fiscal deficit. But they are the reserve currency, so they are able to get away. So I've heard these stories that there will be a financial crash at least 2-3 times in the last 5 years. We haven't had that. So I'm not in a position to make any predictions on that. I think it's very difficult for anybody to do, given the fact that US is a reserve currency. So what is the best I can do? I'm bullish on gold exactly for this reason, that really I don't know what is happening in such uncertain terms. Gold is a safe investment, and it's also a hedge against the currency. So it gives me both benefits. But I was very unhappy when gold was moving as if it's a mid-cap stock. And
small cap is more likely.
Yeah, maybe small cap. Yeah. I'm very happy that the froth is gone.
Yeah.
So if you see year to date, gold is still up 10% in rupee terms. Last year, we were up 70%. So on a 70% return, I was expecting a negative or a flat year. I'm very happy with the 10. But I was unhappy when it again went up 40%. I knew that there's a correction which is due.
Impending, yeah.
So I think this will continue. I remain bullish on gold.
And how much percentage allocation on your portfolio do you have to gold?
I generally tell people that you should at least have 10% in gold in rupees. So you buy ETFs or any of those ways, at least 10. I have more, but at least the starting point should be 10.
Is it double of?
Let's leave that for another discussion.
Okay, Sridhar, always great chatting with you.
Thanks
Thank you so
inviting me.
much for your time. Let me just revisit where the market has settled in at.